a lot of debate about what's going to happen with oil prices ahead, and the big debate about peak oil, whether we're going to really see a surge in supply and a drop in prices in the coming period ahead. We're joined here on the set by Liam Denning.
Hi.
Liam, good to see you. Thanks for joining us. Every time oil prices surge, we get this debate about peak oil. First of all, just take us into this. What is peak oil as people talk about it?
Well, peak oil is a theory that was put about 50 or 60 years ago, and the idea being that oil is a finite resource, and at some point you'll have produced half of it, and once you've produced half of it, then inevitably the decline goes down. And it was actually a pretty successful theory in predicting when US oil production would peak back in the early 70s, but it made a comeback in the run-up to the run-up of summer 2008, when oil prices were going up. Everyone was talking about the fact that Chinese demand was going up, it was getting harder to find oil, and we were obviously going to hit a peak. Now, oil prices obviously aren't up around that level now, and they've actually come off a bit recently, but they're still fairly high by historical standards, still up around, you know, $80, $90 a barrel. And some people still worry that we're going to hit a peak in terms of our supply. But one thing that struck me this past weekend was just around the psychology of the market. We had reports of a potential hurricane in the Gulf of Mexico. We had reports of Syria downing a Turkish jet, and yet oil prices really didn't react to that. And that got me thinking, because if you had that same set of events a year ago or 5 years ago, the oil price would have spiked. And I think what it speaks to is a sense that maybe the supply picture is changing and the market is a bit looser than we were thinking a few years ago.
In 2008, we saw, of course, the deep dive in oil prices during the crisis. Did that dent this theory about peak oil? Did people finally realize that this isn't just a huge supply problem that we're facing? Well,
I think that collapse in 2008, people put that down to the financial crisis, and they saw it as a temporary phenomenon. You know, demand for oil in Western economies especially went down and have in fact, you know, continued to be weak. But I think right now people are beginning to wonder, well, is there something a bit more structural to it? And there's a couple of things. One is on the demand side. You know, we have put in place more regulations in terms of getting people to be more efficient with their energy. You know, we have higher mileage standards for cars coming through, people talking about natural gas vehicles, etc. The interesting thing that's also happened is on the supply side, and there's a new report out from the Harvard Kennedy School that came out late yesterday, saying that actually we may see over the next decade the world's oil production capacity go up fairly significantly. And if you think about it, that would kind of make sense, because over the past decade we had surging oil prices, which were largely because we hadn't invested in the 90s, so we ran up against the limits of what we could do. That encouraged more investment, and will begin, given the time lag it takes to actually invest in an oil field, find it, invest in it and develop it, we should see that coming through over the next decade. And for me, it's analogous to what happened in the 70s and the 80s. In the 70s, we get the oil price shock, the supply shock, prices go up. That encourages everyone to go out and look for oil in places that they hadn't really looked before or thought were too difficult, places like Alaska, the North Sea.
Shale gas, shale oil, right?
Well, and that's what we're seeing now. And I think it's analogous to that period in the 70s and the 80s, because what happened was by the mid-80s, we actually found a lot of oil. We got more efficient at using oil, and the price collapsed. And if we think about things over the next decade, what you could see is if after, say, 2015 or 2016, when a lot of these projects come on stream, if demand doesn't keep up, say we get more efficient, or say the Chinese economy slows down, you could see another significant price decline in the second half of the decade.
So will the peak oil proponents then just change their argument, come up with some other way to argue it than they did in the 1980s?
It's possible, but I think it's difficult this time, because a lot of the peak oil theory rests upon conventional oil fields, the ones where, you know, you basically put a hole in the ground and the oil gushes up. A lot of the oil that we're producing, or the new oil that we're producing in places like North America, is shale oil, where the geology is very different. It's less about punching a hole in the ground and the oil surging up. It's more about fracking and using various means to actually get that oil up out of the ground.
One thing we're not hearing anymore is this talk about a super spike in oil prices, $250, $300 a barrel. Is that basically over now?
That's definitely out of the market for now. I mean, only yesterday, JP Morgan, which has been fairly bullish on oil prices, cut their prediction for where Brent would be in the second half of the year by $25, by around a fifth, basically. So when you see that kind of thing happening with bullish analysts drawing in their horns on that, you know, it's clear that expectations that the market was going to be tight over the next 6 to 12 months, that's really coming out of the market now.
Certainly going to be a volatile story ahead.
It certainly will be.